Payment in due course, we have already seen what is payment in due course. This is also applicable to a bill of exchange. When a bill is transferred for consideration to any person so as to make him to claim the amount of the bill, such transfer is known as negotiation as per the provisions of NI Act. If the holder of instrument signs the bill of exchange for the purpose of transferring it, such signing is called endorsement, which is generally done on the reverse of the instrument. Liability of the drawer. Earlier we have seen, let us also again see it. The drawer of the bill of exchange or check is bound in the case of dishonor, failure to pay by the drawee or acceptor thereof to compensate the holder, provided due notice of dishonor has been given to or received by the drawer. Liability of acceptor, drawee of a bill. An acceptor of a bill is bound to pay the amount thereof at maturity according to the apparent tenor of the acceptance. When a seller is drawing a bill on the purchaser accepts the bill. On the strength of his acceptance, the goods are parted with the purchaser. Later on the due date, it is a legal responsibility of the purchaser to make the payment. That is what acceptor, drawee. Drawee is the person who is supposed to make the payment. Who had agreed to pay, that is why it is called acceptor. He is called acceptor, sorry. Liability of an endorser. In the absence of contract to contrary, whoever endorses and delivers a negotiable instrument is bound thereby to every subsequent holder in the case of dishonor unless his liability is excluded. That means one negotiable instrument is passed on to another in a proper channel and proper manner. It goes to another person means the person who is expected to make the payment is liable to every other person as it is mentioned in that particular bill of exchange or a check or a negotiable instrument as the case may be. When interest at a specified rate is expressly made payable on a bill of exchange, then interest shall be calculated at such rate specified and payable. Suppose a bill of exchange, the person has agreed to pay a rate of interest of 18%, he is bound to pay 18%. In another bill of exchange, a person has agreed to pay 12%, he has to pay 12% till the end until there is a contrary to the effect, an agreement is made. When no rate of interest is specified in the instrument, interest due thereon shall be calculated at the rate of 18% per annum as per the appropriate section of Negotiable Instrument Act. Bills can be classified into inland bills, foreign bills, demand bills, usance bills, clean bills, documentary bills. Demand bills are always purchased, whereas the time bills are discounted. Bills can also be accepted by banks on collection basis. A bill of exchange can be a demand bill of exchange or a site bill of exchange, at site and after site bill of exchange. When a bill is a demand bill, it is always purchased, whereas if it is a usance bill, it is discounted. For example, a person has got a check which is a demand bill, and the check is issued from a different locality or a different location. Of course, today's scenario, it may not be that much relevant because most of the banks have got at par payment. For our understanding, a particular check has been issued from Lucknow and the person receives a check is in Mumbai and you would like to get the money before the payment is made at that other end, then he can approach his banker in Mumbai. If the banker is considering a finance on that, then it is considered that the banker is going to purchase that particular bill, which is a demand bill, which is a check. In another case, a person has drawn a bill of exchange or a promissory note is issued. Let us consider a bill of exchange, that will be more appropriate. A person has drawn a bill of exchange and the buyer has agreed to pay after 90 days. The seller has already given the goods and the acceptance is over. Now the seller is not having money. Then he approaches his banker. The banker is going to consider finance on the strength of that particular bill of exchange. Then it is called, the banker is going to make a payment based on discounting the check. Sometimes collection is also available. Collection means the banker will send the outstation check to the outstation place. get the payment. After getting the payment, the money will be paid to the customer. That is called collection. If a finance is made on the basis of discounting a bill, the banker assumes the role of the payee. Hence, he has the right to get the payment on the bill. The bank had advance on a check issued by the Panchayat on a government treasury. Same has been dishonored by the treasury since the Panchayat official countermanded stopped the payment. Court held banker was entitled for payment since he had the role of holder in due course. This is one of the decided cases. DD, the customer of the bank, has been provided the credit facility under bills finance. The customer submitted a bill of exchange drawn by him and endorsed in favor of his bank, who extended the advance. The drawee did not make the payment. The bank sued DD. DD is contented that the matter should have been taken up with the drawee only. The court ruled in favor of the bank. The reason is, ultimately the money was given to the DD and he is expected to repay the debt. He has got the obligation to pay back the money. The court directed DD to make the payment. The court considered his banker as the holder in due course, and DD, being the drawee, is liable to make the payment. This is yet another case. Drawee bills acceptance and bills co-acceptance facilities. The bank agrees to pay the drawer the amount of bills drawn on the borrower on presentation and recovers from the drawee on respective due dates. This is called drawee bills acceptance facility. Normally, to borrowers enjoying working capital facilities, an alternative to cash credit or overdraft, bank can sue the drawee and also the drawer in case of dishonor. Bills co-acceptance facility, the banker accepts bills along with the borrower. Banker undertakes a joint liability along with the debtor borrower and enters into agreement with the borrower for reimbursement. This is an additional facility available under the finance. Now let us see at random some of the questions. M, a customer has tendered an up-country check to his banker, J, who accepted on collection basis. After sending the check for collection, at the request of M, J has purchased the same. Then the relationship between the banker and customer would be, for every transaction there is a relationship between the banker and the other party. The relationship between the banker and the customer in the case of a deposit is, banker is known as the debtor and the customer is known as the creditor. In the case of a loan, the banker is known as the creditor, the customer is known as the debtor. In the case of collection items, that is instruments, negotiation instruments, checks, etc., the banker is known as the agent, the customer is known as the principal. In the case of a locker, the banker is known as the lessor, the customer is known as the lessee. In the case of a safe custody article, the banker is known as the bailee, the customer is known as the bailor. Likewise here, in this case, when the customer has handed over the check, expecting the bank to get it after the payment is made from a other place, the banker is considered as the principal and the customer, banker is considered as the agent and the customer is considered as the principal. But before the check could be paid at the other end, the customer has requested the bank to advance the money. Now the collection item has been converted into an advance. So in this case, the relationship between the banker and customer is, banker is the creditor and customer is the debtor. Whenever such questions are asked, the candidate has to understand what type of question is asked, whether the relationship is between the banker and customer or customer and banker. Accordingly, the answer has to be identified.